SEM takes a different perspective when it comes to investing. Unlike many advisors, we understand how emotions make an impact on investing decisions. Now, first of all, let me tell you, there is nothing wrong with being emotional. We actually had a client get upset when we said that most investors are emotional, even though he didn't realize that as upset as he got with us, he was being himself emotional. Now, when we realize we can be emotional, we just realize, hey, we're human. And when you're human, this leads to predictable mistakes. Once we know that we're likely to make mistakes, we can sit there and we can plan around those things. So because of this, we highly recommend a behavioral approach to building an investment portfolio. Now, the first step in building a portfolio has nothing to do with SEM. This is the role of a financial advisor. They need to sit down and figure out everything about the individual client. They need to know the goals, the risk tolerance, everything they want to do with their portfolio. And they come up with a sophisticated financial plan that becomes a building block of everything else. The second step is something that I think a lot of advisors forget, is cash is an important part of any portfolio. I will often tell people, do not invest your money with us until you have emergency funds. Because if you have a crisis, say in Arizona, your air conditioning goes out in the middle of July, that becomes a crisis. But if you have money in a safe account, it just becomes an inconvenience that maybe you'll have to replace that money at some point. When you have a crisis though, and you don't have that money involved, you then have to figure out what do you do. That's when your emotions begin to develop. From there, this is where SEM comes in. Once we know the specific layers and the objectives of each, we can help pick the right investment portfolio to line up with that. If it's your long-term retirement money, that would be near a growth objective. And then that, hey, if the market starts going down, you understand that's my long-term money. I have time to make it up. However, if it's your retirement income and you're spending money out of that each month, you've got to be more careful with that. SEM can help dial that in. Finally, the last step is something that people kind of find surprising from a financial advisor. And if you've done all the other steps to building this investment portfolio, you can have what I call the fund money, that top part of the pyramid. Say you want to buy XYZ stock. Hey, if you have it there, great. I actually had an individual client of mine wanted to buy an oil ETF. And he said he comes to these meetings with me and he expects me to tell him no. He thinks of me like his dad, even though he's older than me, because he says he thinks of advisors as the people who tell him no. But as a parent, I think most people understand if you always tell your kids no, once they have a little bit of freedom, they're going to go out and do something stupid. So let's imagine a client wants to buy XYZ stock and you tell them no. And then all of a sudden XYZ stock doubles. Now they're thinking, I should have had more of that. Now instead of 5 or 10% of their portfolio, they're looking at 20, 50, 100. I saw clients in the 90s do this with their portfolios. They put 100% in specific segments because advisors told them no. So if you've done everything else, and that's critical, if a client's filled out everything else and they have money left over, you have room for that. Have some fun. You could possibly lose all of that money, and if it doesn't impact your portfolio, great. That helps you overcome those emotional mistakes. So once you've done that, working with SEM can be as easy or complex as you like. We've built what we call Encore portfolios, or composite models of each of our different programs to give a wide range of return to risk outcomes. So you dial in the risk level and you line it up there. But what we really like about our new custodian TCA is we can dial it in and get very sophisticated. Maybe we want to exclude a program, or maybe we want to get a specific risk level. We can do that on this platform. And we can even allow that red triangle at the top of the pyramid. Say somebody has their retirement funds and it's all taken care of, and they say, you know what? I really like this president. I would like to go ahead and put some money in your aggressive portfolio. At TCA, we can do that. We can peel off 5 or 10% and put it in there. So the best part of using SEM is we can offer sophisticated portfolio management that helps people overcome their predictable behavioral biases. These mistakes that will happen. Sorry, we are human, that we're going to make mistakes. If you've done a good job in setting up your portfolio from the bottom all the way to the top, you're most likely to succeed in whatever it is you want to do in the financial universe.